The following is a presentation of TFNN. The Tiger Technician Hour with your host, Basil Chapman. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Basil Chapman.
Hi everyone, Basil Chapman on the 20th day of December. The month is almost finished. I don't know how this monthly chart can repair itself. It really doesn't look good. And in just 1 month, the Dow has gone from 26,951, October the 4th, that's where we had the sell signal the very next day. And the low today is 22,882. So not only did we take out the 23,300's key support from January and February of this year yesterday with that intraday reversal, 360 or more points higher, and then a move down almost 500 points and closing down 300 something points. We've just done another 373, and there must be some news because the market looked very much like it was attempting to rally earlier this morning. There was an oversold condition technically. It looked to me like we could get not just a bounce, but we could get a bounce that if it held, and in the 130 time frame, if there was a pretty good rally from the low to 130, and then it held a little bit even into the 2 o'clock period, buying could come back in. And now I don't know if that's true because there seems to be some news out there that is different to what was on earlier. I don't know if it's the government shutdown talk or whatever it is. There was just another selling, just as the market was trying to find its feet this morning, kaboom, down again. So let's go. Dow is down 351 at 22,971. The MACD is very weak, and the stochastic, my target for the intermediate term on the Dow was 23,300s and a stochastic in the single digits. Well, today we went from yesterday's 10% to 6.69 right now. So we've got that. The price has pulled back below. We've already gone underneath the 23,000 level, which is really important to hold psychologically, not any other way, but psychologically. But not only that, now we've tested the 22,800s, which is really the next starting level for the 22,200s. And all of this is having a speeded, an accelerated move, something I thought would take a period of time going into the first quarter, January. So we're already done this, and we haven't even finished the month. Still got trading going into the 31st, which means that there's enough there are enough days here to either have a very oversold condition spike or just to keep coming down, lower lows and lower highs. Well, that's been the theme that we've been looking at for a long time, lower lows and lower highs. All right, let's get to the nitty-gritties because the Dow needs to get to 23,150 probably by tomorrow afternoon to say, okay, we're attempting yet to form some kind of a base. So far, this is not very good. S&P, at this particular moment, the S&P is down. I think it's 36, minus 36 at 2470. And a leg after the downside. MACD is very weak in the daily chart. Stochastics at 5%. It has been under 10% for a little bit here. Now it's at 5.74%. This is the equivalent of when the market is looking, running up, and we've got the MACD holding very well, and then the stochastic starts to trade. Remember, we were looking at this way back, going to the October highs. I was saying that there's a good chance that if the stochastic holds in the 95 or higher area, we'll just keep going higher until that fails. Now we've got the exact opposite. We're minus 20, we're under 20%. We're at 5.83. Will this remain in the single digits and we keep going lower, or is this now the chance that the on-balance volume is very oversold? There could be a bounce. Wow, it's going to be an important couple of days. The MACD and stochastic in leg C down in the weekly chart. I've got this as a 5 in Chapman wave methodology. And stochastic at 15%, not good at all. Oh, got to save the day somehow, either get back to the 25.53 support level that is now strong resistance at 24.72 at this moment. And the monthly chart is, I don't know how it can repair itself in December. Very ugly monthly chart. Let's go to the QQQ, which was so 1.41% in the S&P down, 1.60 in the Dow, and 1.54% down in the Qs. The QQQ Trust Series down 2.22 at 152.24. Just a leg C here. ABC, yep, leg C. And MACD's weak, stochastics very weak, 8.9%. And this weekly chart has plummeted under the 153.88 low. 150.13 is the low of February. The other indices have taken out that low, their low, and this one hasn't yet. Where are we? We're at the low today is 151.26. 151.26. We are 16 cents at the low. We were 16 cents away from hitting and then piercing the February low of 150.13. And the monthly chart doesn't look very good. IWM only down 0.65%, down 57 at 87.35, right on the 200-period exponential moving average. Very important moment. It's only leg E. Waste management. That's what I'm looking at. I'm saying, what? The numbers aren't making any sense here. Waste management is down. No, IWM. I missed the I. Sorry. Sorry, if you're thinking, oh my goodness, down in the 50s, it's down 1.72%. A bigger move down, minus 2.34 at 131.63, way past the 200-period moving average in the weekly chart. That's at 137. That'll be major resistance. This is not good action at all. That monthly chart we've been talking about for ages. Horrible, horrible, horrible. All right, let's go on. We want to go to gold. So gold had a really good move. It finally got to the 158, 163 area. In fact, it went a little higher. It went all the way to, 1258, 1263. It hit 1265.9, trading at 1264.4, up 8. Very good action because now it's surpassed that resistance of 1258 in the 200-period moving average. I think this augurs well for gold. As a starting point for the breakout. As I said some time ago, I was asked, how come for my subscribers we haven't actually been trading gold when I've been talking about it, talking about this up channel, that it's in a nice up channel, but it's a really pathetic channel when you look at it in terms of where it was just in April, January, February, March, April, up in the 1390 area, going all the way down to 1167. But yes, this is a very constructive, and what I've been saying is that the MACD is good, stochastic is good, and I kind of jokingly said, I just didn't want to be a traitor to the dollar. We've been long the dollar since April at 90.07. The dollar right now, well, the dollar already hit 97.71 on the 14th. Pull back some. I said for the very first time, we're going to take some profits from our UUP position today, going from the 2350 area to the look, UUP is trading right now at 25.79. So we've been long since 23.63 at 25.82. We took a little profit off, and I'll explain why when we get back. Dow's down 412, S&P's down 40. I'll be right back. Basil.
The TAS Profile Scanner is the most revolutionary piece of trading software that you will ever try. Wouldn't you like to approach the markets with confidence? As you begin your trading day, it's likely that you'll be faced with lots of decisions. In order to make the best decision, the first thing you'll need is a strategy that will help you minimize your risks. Whether we're in a bull or bear market, a good strategy is to have the tools needed to help you scan and analyze the markets before you trade. The TAS Profile Scanner instantly scans and filters over 2,500 global financial markets, such as stocks, ETFs, commodity futures, and Forex. Headed by Steve Dahl, president of TAS Market Profile, the TAS Profile Scanner understands that in today's technological world, the use of top-flight software applications, automated trading algorithms, and technical analysis expertise is essential to successful trading in today's market. Whether you're looking at the trade matrix, the ETF heat grid, the market breadth, the landscape charts, or the many other features of the TAS Profile Scanner, this is a piece of software that will revolutionize how you look at the markets and set up your trades. The team at TAS has even put together a 12-part video series to walk you through every aspect of the TAS Profile Scanner, which you can find directly on the TAS order page at TFNN.com. Sign up now for only $97 a month with a risk-free 30-day trial, so you have nothing to lose and everything to gain. See for yourself how you can harness the full power of the TAS Profile Scanner by visiting the front page of TFNN.com today, and you'll find the TAS Profile Scanner under the Services section. Remember, with a 30-day money-back guarantee, you have nothing to lose. Don't let another day pass you by without trying out this amazing piece of software that will revolutionize how you look at the market and how you place trades. Sign up today.
Many of our new listeners have heard about the Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive the Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on the Tiger's Den are on the front page of TFNN.com.
TFNN has launched our brand new website. You can still visit us at the same TFNN.com URL, but when you do, you'll see a new and improved homepage with a much simpler navigation, whether you're watching Tiger TV live in high definition or just accessing your newsletter subscriptions. We even have new pricing in 6 months and yearly options. Check out the new TFNN.com now and experience all the upgrades. TFNN.com, educating investors.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Hi, folks. We're back. So the UUP, what I was saying is that this is the Power Shares DB US dollar bull. It's actually called a fund, and so it hit 26.12. On the 26.12 on the 14th, and it's now down a little bit at 25.78. But you see this arch, it's almost like a gravitational pull. You're making this arch formation, higher highs, and then they start to make just slightly high highs so that you get a curve, plus you're using time to the right. And that creates this arch formation, as well as you've got the rising wedge, and the rising wedge usually pulls back some and then goes back to retest the high. That's the way I always read the rising wedge formation. So this is going to be really important. The monthly chart is still fabulous. I'm still longer term. I'm looking at the dollar as having the chance to make a V-shaped pattern. The UUP would go back to the 2683 level of January of 2017 this year in a V-shaped pattern. So we've gone from last year, 17, we went down to a 2309 low. We got in just after that. That was in January. We got in early April, April the 6th, I think. And now it's rallying. And look, the MACD and stochastic are very strong. But in the daily and the weekly, the MACD and stochastic are saying, getting a little tired here. Okay, now, this is what we're looking at. If you look at the EUR-USD, that's the euro-dollar currency pair, breaking out to a leg D. So you've got gold in leg D in the daily. Let me just double check on that. Is that a D or an E? I can't remember right now because I was looking at so many. I was asked about earlier in the day. So so the euro is a leg D. It's about to test the left side high of 1.15, the area of 1.15 late October, early November, and at 1.145 right now. This is good action. So keep an eye on that because the MACD is good. The stochastic's okay. It's at 54%. It's not that good. Neither is the weekly chart. If you look at the yen, USD JPY, what a pullback. Look, this is deep. This is serious stuff. Peak D in the weekly, we finally took out that rectangle formation that we've been in since October. Every week we've been within this range. Now we're underneath it, and it's a peak C in the monthly chart. Still very good, but yeah, you could have a bit of a pullback here, and that's what's happening in the daily, which went under the 200-period moving average of 111.73. It's trading at 111.23 right now. So not very good. And now I wanted to show you something else in silver. Silver is finally in leg D. Not a great looking chart, but it is leg D, and the MACD is good, and stochastic is okay at 79. I'd prefer 82% or something like that. And it's helping the weekly chart, which is not great, and the monthly chart is terrible. So silver's lagging. What happens here is going to be very important, because if the dollar is under pressure, you could see Johnson & Johnson, you can see some of those stocks that have been Procter & Gamble, they got that might have dollar issues, at least have a counter trade rally, and these would be defensive stocks. So now I want to look at the TLT, and the TLT earlier was screaming to the upside at 121 right now 121.57, up 39 in a very strong G/C in the daily. Weekly is in leg B. The high was 122.03. There's no question that my contention has been money will come out of equities and go into the so-called safety of bonds if this decline continues. So far, that's kind of what we're seeing. Now, let's do a couple of things. So the TLT, I suspect, could go a little higher, but it's in the area in the weekly chart of the 122s, 121s to 122s, very strong resistance. And if you're looking at crude oil did rally quite nicely yesterday. It just missed going to the bottom of the oval. It's still in the neck formation, I guess, and that makes the low of 46. Today's low of 45.67. Let's get rid of that. 45.67. Really important because it goes to an E and an F. We've got to watch this closely because the crude oil and high-grade copper and wood, the symbol for the iShares Global and Timber Forestry ETF, wow, all very, very weak. Let's just look at the housing sector. Wood is trading, I believe it should be, oh, why is it so slow? Oh, because I wrote the wrong symbol, WOOD. Trading at 56.96, down again, an even lower low. I have to tell you, this is ugly stuff. I don't know what the Fed was looking at yesterday. Yep, independence is one thing, but boy, I've been talking about this for the last many weeks. I said if the Fed governor would look at my cash index, that's Cintas, look at that. Oh, down again, 5.44 today, down. Look at that monthly chart. Cintas overalls and uniforms, Amazon, which is, of course, everything, down today, 45 at 14.49. Looks like it wants to test the 14.20 round number low of the 20th. And SPY, look at the SPY, well, we did the S&P, but look at the SPY accelerating down the leg E, daily, broken the left side support of 252.92. Low today is already 240, we're at 248.19. The low is 246.79. And Home Depot, let's see where that is. Making a lower low in Home Depot. And if you look at the HGX, which is, now I'm going to get to my first question. Question was, so this is leg D to the downside. Oh, this is not bad because it's an H pattern, but so far it's holding the left side low of October. The HGX is the Philadelphia Housing Sector Index. 240.19 was the low back on the 29th of October. Today's low is 241.58, holding okay. What was the question? Let me just get to that. I'll get to that in a second. I can't find that. Second is more than a second. Okay, there it is. New bear market and real estate. Hello, Basil. Looking at my bigger picture with my Fibonacci. Yep. What effect do you think this bear market will have on the real estate market? I appreciate your insight. Thank you. So, yeah. So this is what I'm looking at. The affect and the effect of the stock market to the housing sectors is really is dependent upon the sectors involved. So overall, a down market has not traditionally, but over the last 15 years, no, the last 20, since 2000, almost 20 years, when the stock market's tanked, money has at some point gone into real estate. when the real estate's tanked, money is transferred over to the stock market. However, what I'm looking at here is that it's a sector rotation. And my contention is that the real estate markets in the Northeast are going to be hurt a lot more in the next big downturn, which is already starting. It's only just starting. And I suspect there's still another big move to come in single-family homes that are of magnitudes that we just can't even imagine, that houses are going to be built that would be what you'd pay for an apartment building or a hotel or something, very selectively to the upside. Overall, I'll talk about this as we move on. I've got some other questions I want to get to, but most important, let me just quickly look at the E-mini because I think that's having a little bit of a rally. Yep, made a trough F, and now we've got a new leg, B to the upside at the 2-minute chart. We'll see what happens.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com. The Path of Least Resistance, David White's daily market letter, gives you trade recommendations based on David's proprietary Power Law Vector indicator that put the odds of success overwhelmingly in your favor. He'll give you the entry price, price target, and stop price for each stock and option trade. David combines his years of trading experience along with his background in technology and computing to offer his subscribers his take on the markets on a daily basis. Every trading day by 9:30, David publishes his morning issue of The Path of Least Resistance, along with updates sent out throughout the week whenever there is new actionable trading information. All new subscribers receive a 30-day, no questions asked, money-back guarantee. To sign up for David White's daily trading newsletter right now, visit the front page of TFNN.com and you'll find the Path of Least Resistance under Trading Newsletters. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
There's a question about the E-mini up down 18. It's just the 10-minute chart is right at resistance here. Nice rally off the low that was made at 2463.25. And let's see if this can continue. Now, I don't know what the news was. There were just so many signs to say that yesterday's really sharp spill-off towards the latter part of the day, and then that little bit of a bounce that both were overdone on the upside after the Fed announcement. There was still a big rally to the day's high, and then the sharp pullback, and that there should have been support that held around about that 23,000 level, I think, on the Dow, actually a little bit higher than 23,000 on the Dow. Now, the fact that news was treated negatively means that there isn't internal strength. There's no question about that. So that was the third attempt at alongside. Two of them did have profits intraday, even though the stops were raised and then taken out. But at the same time, today was just straight down. So this to me is a disappointment in the sense that there was an opportunity for the market to rally just short term. That's what I'm talking about. There was supposed to be a bounce because I'm looking to re-short on this downside on a pretty big move to the upside. We haven't got that. So let me just go back to this question on the real estate. So selectively, it's happening regardless of the market. Just overbuilding is really what I was looking at for the whole Northeast. That's just everywhere I've been. So this is probably all the way from Philadelphia up to Portland, Maine, and sort of inland a little bit. And that's kind of what I've covered in just travels over the last year and talking to people. Other things that I'm hearing anecdotally tells me that there's a really good chance that the highs that were seen earlier this year and last year in many of the real estate deals in the whole Manhattan, Brooklyn area, it's going to be hard to replicate that. It's just hard to know what could do it to be able to get those prices back again. In the South, that's different because you went through a depression almost with the crash of 2008 in real estate. So that I have to treat differently. And I'm talking about this whole rotation thing, whether it's market, whether it's sectors. This is really the sectors of real estate that either are late to the party or early to the party and could survive because they've come off lows that were just really major, major lows. And that would be the parts that were most badly hit during the huge housing crisis of 2009, 10, etc. So it's rotational. And that's the reason why I'm thinking that even though I'm looking at some really terrible chart patterns, I mean, just look at this housing one, that some of these charts, like the New York Stock Exchange, which is really ugly, look at this New York Stock Exchange. It's trading down now at what percent? Down 0.81%, much better than the Dow or the S&P. And what's really interesting about it is that look at that monthly chart. It broke key support levels. 11,300 was really the level I thought of as support back to 2017. We've already been down to 11,281. All I can say is that in this particular instance, this is telling me that a chunk of price has been done. Now I think we start to look at time and some price. And that's why I'm saying I don't see a real substantial low coming in until sometime January, February. That's really what I'm thinking. Meantime, we still haven't got a pretty decent bounce yet. So that was the question. Next one is I had was, okay. Hello, Basil. I've really appreciated your analysis on the market. You've helped me build a lot of cash and now starting to buy back in at much lower levels. Smiley face. Hopefully, well, thank you. Hopefully we are getting close to the bottom with some bumps along the way and soon starting to build a base from which we can make that coda move. Let's hope that's going to be true. I think it should be. From a society standpoint, I can't help but think that with the expansion of online gaming and betting, that this could also be a growth area, maybe like the cannabis stocks. Have you taken a look at BJK, which is a gaming ETF, BJK, not making a lower low today. It's a 32.65. Van Eck Vector's gaming ETF, in leg F on the downside in the weekly chart. All right, let's go on. Certainly nothing very good right now, but thinking about taking a starter position. I'd be interested in your socioeconomic thoughts on that market segment and then also your technical analysis if you have time during your show. Don't have the luxury to call in during the day, but I do listen. All the best to you and your family over the whole holidays. Walter, back at you and to everyone listening, the TFNN family. Yep, holiday greetings all the way around and just a happy healthy new year. I say healthy because we had to play last night, musical, 1776 here in Watertown, Massachusetts. But pretty good performance, always trying to be as contemporary as possible. I'm prepared to put up with that. But it was very well done, and it's really well written, just brilliant. I've seen it once before at the Lyric Theatre down in Boston, and was there. I enjoyed it as well. It was really good. And just before we went out, just we have a quick meal with the couple that we go with, and we're just walking out for no reason. A friend just tripped, bam, fell on her face. She's very athletic, plays tennis and all that. Just bam. Oh, you know, just fractured a finger or two and smashed the nose, and out of the blue, boom. So a healthy, happy year to you all. Let's just, you know, while we've got everything going for us, let's just appreciate what we've got. It's really important to be able to do that. You never know when out of the blue something happens or happens to a friend. So I'm going to say this, Walter. I think that the gaming sector has already had its big move. I would not call this a bubble top, but I think it's close to a minor bubble top when it went to a high, the Van Eck Vectors Gaming ETF back at 50.35 in May of this year. It goes to 50, it's trading at 32 right now. It was a 40% decline. You know, I think that you're absolutely right in looking at the sectors. I think this is going to be accompanying others that go up. I do think that the MJ, which I mentioned when I did my webinar, folks, you can still get my webinar if you subscribe to my service. It's available just from, I think, 2 weeks ago. I spent a whole bunch of time talking about different sectors. One of the sectors we've been looking at and we bought yesterday, a stock in that sector, is actually holding so far pretty well. The day is young, of course, anything can happen, but we're trying to establish some kind of footing in areas that could survive this whole next 6 to 8 week period. We'll see. So the MJ is the alternate harvest ETF. It's the marijuana or cannabis sector. I think that, for instance, your gaming sector ETF, BJK, is the symbol. That has already started some maturity to it. It's been around a long time. You've got, I think I'm trying to think of the name, EA, is that Electronic Arts? Or was it, why am I forgetting the name? There are a couple of stocks that are really involved in that. If you look at NVIDIA, it's telling you there, they were very much involved with that kind of gaming machine, graphic processing for workstations, mobile devices. And what does it do? It goes from the 290s to trading right now at 135. So I think that area is done for now, but I think that the MF has to find some maturity. Oh, I need to talk about that. I'll talk about that when we get back. I mean maturity.
Hi, folks. This is Tom O'Brien. If you'd like to be the bank and get the type of interest they receive instead of the low interest rates they give to clients, then I have an investment you may want to take a look at. I'm offering 4-year secured first mortgages on buildable city lots in St. Petersburg, Florida. The investment can be anywhere from $30,000 to $75,000 per buildable city lot. The interest paid is 7% per year, paid monthly. Depending on the investment, the income per month per lot ranged from $175 for a $30,000 investment to $437.50 for a $75,000 investment. If you are in the CD market, you want to look at this investment. St. Petersburg is located in Pinellas County, which is the densest county in Florida. If you're looking for an investment with your principal intact that pays a good interest rate, this may be for you. The supply is limited, so act now. For more information on these secured first mortgage opportunities, you can call me at 877-518-9190. That's 877-518-9190. No
matter what kind of trader you are, 2018 is a great time to try out a subscription to Tom O'Brien's Gold Report. Whether you just plan on diversifying your portfolio with some exposure to gold and gold mining equities, or you're a gold bull that sees 2018 as the year of commodities, now is a great time to sign up for the Gold Report. Tom O'Brien publishes his Gold Report every Monday morning before the market opens and covers a variety of topics including gold, silver, platinum, copper, the XAU and HUI, the dollar, bonds, South African rand, as well as more than 20 of the most actively traded mining equities. Start your 2018 off with a bang and sign up for the Gold Report today. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. For all the details and to start your subscription right now, visit the front page of TFNN.com and you'll find the Gold Report under Investment Newsletters. Are China A-shares hot or not? If you trade China A-shares, now may be time to take a closer look. Trade CHAU or CHAD, Directions Daily CSI 300 China A-share Bull and Bear ETFs. China A-shares in either direction. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
Hi, folks. So just before I go on with these different ETFs, I wanted to also add Bitcoin to it. I want to go to Mike in Ormond Beach. He's waiting patiently. Hi, Mike. How are you? Do we have Mike on the line?
View of the S&P and the Dow and all the indices were that we would be going much higher. Being that we went through the February lows, has your long-term view changed? And at what point would it signal that the top we had in September was the top for a while, and we may not have that next higher phase for quite a much longer time?
That's a very good question. So now what I'm going to say to you is this. December's not completed yet, but as the monthly candle of December stands right now, the way it's plunged through every single support level, the way the MACD's turned down, the way the stochastics turned down, which is now in the monthly chart at 63% on the S&P, which is down from the 2940 level to today's low of 2462, that is a really big decline in a very short period of time. So it says to me that no matter how I want to count the waveform, there's going to pretty much, I shouldn't say for certain because we've still got about 5-6 trading days left, but there's really a very strong chance that I'm going to be putting a down arrow in the S&P, which would imply it's gone from a sell signal immediately to a sell mode. That would say to me, to get out of the down pressure, it's going to take at least another 2 monthly candles to see where it establishes some kind of a base. Let's just imagine that it forms a base and it starts a brand new move to the upside. That upside couldn't close at a peak D, brand new peak D, for anything less than, I used to call it a 7-wave form. So that would be at an absolute minimum of 8 months from the day that a low is established. So you've made some really good points. So what I would say is if this last phase, what I call of the coda phase, if it's going to come about, it's going to have to come about because price starts to establish some kind of a base. We start to use time. At a certain point, big moves to the downside are replaced by long wicks to the upside so that the candles on the weekly chart start to improve with higher lows. The candles themselves don't matter as much as I want to see higher lows. And then we have to reestablish a whole brand new buy mode. If that's going to be the case, I don't think we can even talk about it until we see the VIX. And the VIX right now is trading at 28.19. I suspect that the kind of low that we would have to get, it might have to be 2 lows, but it's going to have to be way up in the 40s, maybe the 50s, to actually finalize, get everything out and start fresh. if you look at certain stocks, so it's a very good question because the S&P 500, if you look at the S&P 500 and you compare that chart with the one I was showing a little earlier, the NYA, the the 2000 stock, New York Stock Exchange, that one has the stochastics already at 38%. So I'm going to be using a multitude of these longer term charts to be able to establish when I think that some kind of a low is formed. But the major question, and I knew it was going to be a question that's going to sit there and make it really tough for me to be able to say with great confidence that there will be this find that we haven't made the top, that we will make and we will establish a different kind of top. But I have to look at it. I'm still looking at it as a Coolidge type rally of 1929 to 28 when he handed it over to Hoover in 1929. That's kind of what I'm looking at here, and that would say that at some point fairly soon, if you're looking at a 9-year bull market, having what, a year, let's just say that the New York Stock Exchange is a good benchmark. It's made its high in January. So far, it's only 1 year of consolidation. Hasn't come even close yet to the low that was made back in 2016 under 10,500. But of course, we're getting close. Great question, and I hope to be able to furnish a lot more details because now I'm going way back into my socioeconomic, political, geopolitical aspect, because that's the thing. I can't look at the market at this point for that particular coda phase. That has to be done on a level that says there is such an emotional bankruptcy of wanting to own things like stocks that the only thing we could do is to get a major rally to get everybody in. But I don't believe that the tops that were made sequentially throughout the year from the New York Stock Exchange, very last was the October high in the Dow, which coincided with, on the day of Apple's high. I can't not consider that we've actually been in a consolidation for a year already. But I also can't dismiss, and I'm sure you would agree, that plunging crude oil prices, whether it's political or economic or whatever, together with the timber and forestry ETF, together with the home builders, together with this whole thing with what's happening with interest rates and all the negativity that's going on right now, you have to consider that the top that was made is a pretty serious top. I'm not denying that at all, which is one of the reasons I'm saying to subscribers, we wanted that big cash position. But you got a great question, and I'm not going to obfuscate. I'm not going to say I know exactly. I'm going to say I believe that we have not made the top. That's not the kind of top after a 9-year bull market. I think a 9-year, when this is finally over, it should be over because we get the kind of collapse because people were just putting so much money into the stock market, and then it pulls back, and finally you get the Bernie Sanders crowd who say, see, told you so, and then we get this whole thing of anti-capitalism, and that's going to be a phase that's not going to be very pleasant. I hope I'm wrong about that, but that's really what I'm looking at. So I just want to establish what I'm coming from and to say, yes, I think that the top most recently in the down the S&P and earlier on in the New York Stock Exchange and in the QQQs, serious top. There's just no question about it. But the big question is, if you've got very long-term money that you want to put to work or that you've got and you don't know what to do right now, you can scale different ways. You could scale in, if I'm correct, about another big move coming. But if you're still very nervous about it, hold the cash position. And in your IRA, that type of thing, even here, if you want, you can take a little bit off. Instead of putting in, you could take a little bit off if you think there's still at least another couple of months maybe of consolidating. So it is a time to be very careful because I never dismiss monthly charts that are giving me sell signals because you just don't know how long or how deep the correction could be. So I'm just saying, yeah, be careful, but on a trading basis and looking out, we've got sectors that I think are going to work. and they better work, and that's very important. That, for instance, financials, you don't want to lose the financials. They better show some strength now. Hope that helps you, Mike.
Yeah, so basically you're saying that the earliest...
Hold on. You're going to be caught by the break. I'll talk
I'm
to you when we
certain
get back.
you are or strive to be one of the best at everything you do in life. It's the most common trait that we tigers and tigresses share. If you're looking to become the best of the best when it comes to managing your money, let me teach you to do what most wealth managers tell you can't be done, which is how to time the markets. I'm Steve Rhodes, author of Mastering Probability, and for the last 12 months, Timer Digest has been tracking my newsletter signals, which have earned me the ranking as their #1 market timer in the nation for the S&P 500 for the last 12, 6, and 3 months. Timer Digest also ranks me as the #1 market timer for gold as well. The fact is, markets can be timed, and I'll teach you the exact set of tools that I use that has transformed me into one of the best at what I do. Sign up for Mastering Probability today by clicking on the newsletter tab on the homepage of TFNN.com and get immediate access to workshops where I take you step by step how to use an extraordinary set of tools as well as provide great market calls too. Sign up today.
If you haven't checked out the newsletters page of TFNN.com, what are you waiting for? All of the TFNN newsletters are informative, up-to-date, affordable, and a must-have for every trader looking to gain a competitive informational edge in today's markets. TFNN newsletters cover every aspect of the markets to offer you the very latest in market news. Plus, new subscribers get to test drive our newsletters risk-free for 30 days. From all aspects of the markets, including stocks, bonds, metals, commodities, and tech, there's a newsletter to fit your needs exclusively from TFNN. Stay informed each day you trade and get that competitive edge that will help you stay ahead of the game. Visit our newsletters page by going to TFNN.com and click the newsletters button near the top of the page. TFNN.com, educating investors.
You know what's cool? Taking something that's good for you. Something specifically formulated to help with weight loss, better sleep, stress reduction, and the need to detox.
Nico, our hunter and gatherer ancestors found all their nutritional requirements for health in their wild environment. But today, our food sources no longer contain the vitamins, minerals, and nutrients our bodies need to stay healthy and strong.
That's why we need Primal Edge Daily Nutrition. It includes a special blend of ionic, oil-based vitamins, minerals, fatty, and amino acids in an easy-to-use liquid form.
Primal Edge is powered by highly concentrated folic and humic acids, nature's preferred delivery system. They have been called miracle molecules because, like sunlight, air, and water, life cannot exist without them.
That's right, Paige. They ensure we receive all the nutrition we need to be healthy and thrive. We take it every morning.
Primal Edge, formulated and approved by Nico and Paige of Living a Primal Lifestyle. Buy it today for just $89. Click on the Primal Edge banner on the front page of TFNN.com.
Hi, folks. This is Steve Rhodes. Stay tuned for another great hour of the Trader's Edge, heard here at TFNN.com.
Hi, folks. Mike, you still there?
Yes, I am, Basil.
Okay, so Mike, this is what I wanted to do. I've got a whole bunch of questions, and a couple of them pertain exactly to what you're talking about and what I'm talking about. Let me do tomorrow's Friday. Yeah, tomorrow's Technical Friday. Let me take tomorrow a big chunk of time. We'll talk about this exact thing. I'll show you what I'm looking at, and I'll show you what levels we're looking at, the whys and the wherefores. Is that okay?
Yeah, that's great. Thank you, Basil.
Thank you very much. So, folks, just let me do this. I got a question. So, Jerry sent me a note saying, where did it go? Oops. Oh, well, first Ted sent, Basil, the New York Stock Exchange completed a 1-to-1 ABC down today. Target I had is 11,240. Best regards, Ted. Ted, thank you, guy. I'm looking at something very similar, but the day's young. We just don't know. Next one is George. Want to know about the SDS. The SDS is the invert. He says, I've had this for a while, since 34. Trading at 44.80. Congratulations, George. Another leg up. This is leg E. It's going right into resistance, but when you get a hysterical market like this, it could go higher. What I'm going to say, George, raise your stop on part of your position, and if there's a really a bad close today, then what I would do is if there's a gap down tomorrow, I'd start maybe taking a little bit off because we could get a Monday reversal coming into early next week. But this is congratulations. Next question I had was, wow, I had a whole bunch. Oh, this is NBEV. NBEV, NBEV. I can't read it. It's no time to read it, but it's trading at 6.40. This is one of the better ones. Beautiful left side, right side price, time match, and New Age beverage call. Peak E in the monthly. You know what I'm looking at? 563 is support. It's at 639. It looks to me like it has one more day to try to get to the sevens, but it's holding very nicely. And if you're still long it, I can't remember who it was that asked about it. Congratulations. So we're about to hand you over to Steve Rhodes, and then you've got Dave White, you've got Tom O'Brien at 4 o'clock, and then I will be on with Tom later on today. Folks, just be real careful out there. This is a market that is really, now there's news coming out, I'm sure, from the chart pattern. This could be an acceleration down today because we're already down 426. Don't play games. If you put tight stops in, there are going to be plenty of buys to put money to work later on. This is just a trading market right now, and probably trading just to the short side at this point. Have a great day. I'll be back later. Otherwise, I'll see you.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.